guys, here's Monday morning, February 25th. As you can see, we're dealing with very painful markets this morning, but we know extremely well where key Fibonacci resistance is. Bright green line is a key Fibonacci target, as you learn in the course. To the downside, we're dealing with key Fibonacci support at 2808, to the upside 2810.50. We've been stuck here for the last 15 minutes after open. We know extremely well that nothing else is possible. Trader who chooses to trade such narrow range absolutely must respect this as key target to the upside, as we absolutely expecting price to collapse back down to 2808 again and again and again. This is market this morning. This is broker's heaven. Nothing else is possible. In day trading, when every single tick matters, it's absolutely crucial to understand and remember that if you trade long-term, identical price action, identical Fibonacci levels apply. This was 2300 on S&P in 2017. Key Fibonacci resistance that became key Fibonacci support in 2019. Price continued through crawl 2017, frozen at this level, exact same place where S&P is this morning. And here's a reminder of the events. January 2019, shock or not, key Fibonacci resistance 2017 becomes key Fibonacci support 2019. Identical Fibonacci level, very different strategy. Do you want to trade weekly? Do you want to trade 1 minute chart? Do you want to trade 5-minute chart? Do you want to trade daily, monthly? Choice is yours. Identical accuracy applies. Market remains in pain. When it comes to day trading, market can be in this brutal chop for hours. Market can be in this brutal chop for days. Key Fibonacci resistance and key Fibonacci support identical on oil weekly in 2018. Bullish rally overextended, market in pain. Market taking a massive pause for months. Key support decision point 2 at 64 remains respected when market starts crashing, reaching reversal zone at 77. All identified months and years in advance. This key support on oil is crucial, respected for months and months and months. Identical thing you see playing out finally on oil is what we would love to see on S&P when oil finally starts crashing through support. This is the only way S&P will stop being in pain. If it will start crashing through 2808 support. If not, market will become more and more painful. So what oil had done is what we would love S&P to do. Identical Fibonacci level. Identical accuracy. Very different strategy. Do you want to be day trader? Do you want to long-term trade? Exact same strategies. Why not? Choice is yours. To the tick, every single day you see the accuracy of the method. Every day, every time. No matter what you trade. All you have to do, play by the rules. And if you do, the skies are the limit. Key support and key resistance in a play, just like on oil and S&P weekly. Except in day trading, every single tick matters. If this support will remain respected, market will remain in pain. We're sitting at 2019 high, and we know extremely well, shorting into this support, not the smart thing to do. This support respected, buyers remain in charge. Market is flawless Fibonacci chess game. Once you learn how to play this, You can play Fibonacci chess on any instrument, any time frame. Choice is yours. What do you want to trade? And what S&P just done right now is very powerful reminder. This is your exit, this is your entry. Nothing else is possible. Brutal Monday morning for indicator trader. Spectacular Monday morning for Fibonacci trader. Favorite event of 2018, Netflix sell-off after spectacular news release, showing you exact same Fibonacci resistance is reached when Netflix comes out with spectacular news, adding 7 million subscribers in Europe. Why in the world is Netflix selling off and crushing exponentially? Because Fibonacci said so. At the end of the year, Netflix reached Fibonacci reversal zone, trend inception. And this is what Netflix looks now. Key Fibonacci reversal zone at 2020 area identified for years in advance. Trend inception, where Netflix rallied from 2018 at the end of the year. And this is what it looks like now. Bullish rally is no surprise, not the place to short, the place to monitor for long. 2019, Netflix comes out with spectacular earnings again. However, it does not mean a thing because key Fibonacci resistance 376 is a problem. Sell-off of 2018 and key Fibonacci resistance 2019 is spectacular reminder. News and earnings don't mean a thing if they contradict Fibonacci levels. This time around, 315 key support respected. It was not the case in 2018. And that's what price does every time. Spectacular news on Netflix twice in the last 6 months is ultimate reminder. If you know where Fibonacci levels are, you trade with ultimate accuracy. The only thing you have to do, play by the rules. And if you want to day trade both, why not? Choice is yours. S&P keeps doing exact same thing as Netflix, as oil, as S&P. This is a place to exit. This is not the place to take entry. Never forget that. And always and forever play by the rules. And if you do, the skies are the limit. No indicator will show you this. Minutes, hours, days, weeks, months, and years in advance. Only Fibonacci, the natural predictive tool in the markets, can. And if you want to day trade and position trade both, the skies are the limit. Please do, as many graduates and many students in the course do. So, market remains in pain to the tick. Key Fibonacci support and key Fibonacci resistance respected, no matter what you trade.